Welcome. This is a video on how to gauge the performance of the market. Are we going to continue on a downwards slide? Have we bottomed out? And are we going to go back up again? Those are the questions we're trying to answer in the procedure that we're about to do. The very first thing that you need to do, and we thank Yahoo Finance for this, is to go to Yahoo Finance and look up the GSPC. So we're going to take, we go from the very beginning here. I'm just going to look for Yahoo Finance. And there we are, Yahoo Finance. We're going to do a symbol lookup. And the symbol is caret, which is shift 6, GSPC for Standard Poor's 500. Search finance. We'll go to the left menu here and choose historical prices. And that'll give us a chart of the daily prices of the Standard & Poor's from 1950 to our present date, or yesterday's date. Make sure that daily is chosen because we want to get daily data. And scroll to the bottom because we're going to click on the download historical or download to spreadsheet link. So now it's going to download this data to a spreadsheet called table.csv, a comma delimited spreadsheet. Okay, once the spreadsheet is downloaded, go to where that was downloaded in your downloads folder and rename it. Let me remove this one because we're going to have a conflict since I already did this previously. Once you've renamed it, copy the comma delimited file into SierraChart data. I'm waiting here for the file explorer. It's doing its thing. Now, since I've already done this previously, now I gotta go through the steps, because the next step is a bit more complicated, because once we copy the file over into SierraChart data, we need to open up the CSV file and sort it according to ascending date, because the format is backwards. It's got the latest date on top of the spreadsheet, and we want 1950 on top of the spreadsheet, going down to 2016 of February. You had a question, Donna?
You need to open that first before you copy it and paste it into Sierra charts, right? And reorganize it.
Yes, but not before you copy into SierraChart. Copy it first into SierraChart, and then go ahead and open it under SierraChart data. I don't know what my file explorer is doing here, but come on, guy. There you go. Finally. So I copy and go to where I have my SierraChart. Open up SierraChart data, and we will paste it in here. Now, since I already have a copy in here, I'll just replace the file in its destination. Now, open up the file in your Excel by double-clicking on it, and hopefully you have Excel installed on your system. I'm going to minimize the browser, or plan to get out of it. Hopefully that'll make me go faster while we wait for Excel to come up.
So you just right-click on it and say open with Excel?
I actually double-clicked on it since the .csv file extension automatically goes to Excel. And as you would notice here, the date column, you have the latest on top, and we want the 1950 on top. So we select the whole spreadsheet by clicking up here on the upper left so that the whole spreadsheet is grayed out. We go to Data, and to sort, and column sort by is the date column, and we want it oldest to newest, and say OK. There we go. 1950 is up on top now. We're going to exit and save everything. Save. Save. Replace. Yes, keep the format. All right. You now have a historical file of the S&P 500 in the right format. We can now open SierraChart. Come on, SierraChart. I'm going to close this one. Hopefully that'll lessen the load on the CPU. Just need to be patient because the video is taking a lot of the CPU cycles. I'm just curious by how much. Let's look at the task manager. Maybe I shouldn't have done that. Come on, SierraChart.
Well, it helps that it takes a while because then I'm able to get my notes.
Mm-hmm.
It's clear.
Yeah, at least we're getting the weight. Wait, it says. Okay, OEC is coming up. SierraChart is coming up. Once SierraChart is up, go to File and open Historical Chart. And we're going to pick up the comma separated file that we downloaded from Yahoo of the Standard & Poor 500 data from 1950 to present.
That's the chart that we renamed.
Mm-hmm. We're going to go to Chart Settings because we're going to change the way this information is plotted. Because we're not just going to use a number of days to load, we're going to use a date range. And the date range we're going to use is...
So we want to open File, open Historical Chart, then open Chart you rename, and then you went to Chart Settings.
Yep.
And then we're going to
use date range, copying from 1950 to the date range of yesterday, 2016-0209. Under Historical Chart Bar Period on the upper right, choose Monthly. And just for
too fast.
Historical Chart Bar Period.
Copy and paste date range in File. To use date range, to use date range, to use date range. Then click on candlestick bars, right?
For the draw type.
Change
Historical Chart Bar Period
side
to Monthly.
Right side, hang on, right side. Change to monthly, okay, monthly, got that. And then change graph drop, right? Okay, graph draw type is candlestick bars, got it.
Say OK. Now, we are going to skip the step in which we went into analysis or studies and created this historical analysis. We created this from the chart book that we're using for trading oil, this historical analysis. So we're now going to analysis historical to apply this study on this chart. And there you go. The study has been applied from our chart book that we use for trading. And we notice that the MACD...
Wait a minute, so you went to, okay, you went to analysis, and then you went to historical. Okay, and then what after historical?
Now we're going to change the... We go to studies to change the multiplier for the MACD scaled.
Go to studies to change multiplier or
the lot scaled.
Lot scaled.
And we changed it to 0.5.
Change to
the multiplier.
0.5, and what was it before 0.5, do you remember?
It was 1700.
Okay.
So we say OK.
So when you hit historical, it automatically put that in the chart.
Correct. We use the studies of historical and applied it to the
All right. There we go.
S&P, and there you go.
I think
And
I got everything written down, and I got all the pictures, Ray, if you need all that.
and for your sanity check, you know that you had a housing crisis beginning in late 2007. So here's the housing crisis, and you got your chair back, you got your armchair, you got the blue below the black and white telling you that yeah, that's a downtrend. And it didn't recover until we had this lift here of the Arun on May of 2009, May and June of 2009. That's when the housing crisis finally recovered, or bottomed out, I should say, bottomed out, because it took 2009 to March of 2010 for the white MACD to finally go above the zero, telling us that we now have an official upmarket.
And then in 2001 was that bubble. What was that?
In 2001 was the dot-com bust, when all the dot-com stocks were worthless.
2000 and 2001.
That started in October of 2000, where you have your chair back, you have your armchair, and the blue is below the white MACD. And we kind of like continued on a downward cycle until 2000 and until May of 2003. And that's where we had the lift, the Arun going outside the upper danger zone headed towards the mids, the blue MACD above the white MACD. The recovery has begun. And we weren't officially an upmarket until that white MACD crossed through the zero on November of 2003.
Okay, I got all that. Sweet. Thank you.
And then from
Now you can
2000,
essentially do this with any lines, right? Not just these. You can do whatever you wanted and do it this way. This is a way to, right?
what do you mean by any lines?
Well,
Because
like if you wanted to put in, say you had something other than the room, like you had the, I don't know, what else you have, like your MACDs or something like that instead of.
well, we are using the
Well, you
MACDs.
said MACDs, or you say you can do it with the rooms or something, or you could do it with jerks, or you could do it with whatever you have in your thing, right?
Well, essentially, what this proves to me is that our current chart book layout is very useful.
Right.
You see your chairs, you see your lifts.
Right. Well, that's beautiful. So, and then how do we get the video? So then I'll have the video, the pictures, and my notes. How do I get the video?
Oh, it'll be on the blog site. But here we are. We're going to answer the question of where are we on the current downtrend of the market? Because in February of 2015, I warned our group that don't stick any more money in stocks because you're going to lose money. We've topped out on stocks and we're going to start the downtrend.
Yeah, I wish I wasn't in a depression at that time. I could have saved my money.
Yeah, so that August of 2015, we see the chair back, and that should have warned us totally to be out of any equities, out of any stocks.
Right.
So the question becomes, where are we on the current market downtrend? We've officially begun it, and we've still got more to go because this black and white MACD needs to get past the zero and continue on down and finally bottom out.
Right.
The Arun is going sideways below the zero, telling us that we're going to continue on this downtrend. So the market stocks are still going to continue to lose money.
Yeah.
We haven't even bottomed out. So
Yeah, it'll be about the next 4 years. I think Greg's right in saying that in 4 years we will reach our limit of no return for the United States dollars with the math. Explain that to Arnie, Ray.
let me pause this video.
Oh, I'm sorry. I thought it was already paused.
No, well, actually, I'll stop the video.
I'm sorry. That's not good to have that on.